Hi folks, we are here today to teach you a new system which is called the 4-hour Vegas tunnel system. It's an interesting system since it's a little bit more conservative than the usual systems I trade, and it also uses a lot longer time frames, but the advantage of them are that they just give you a pretty good return on investment, and they are very accurate. So if you just check it out and see if it's right for you, okay? Alright, let's get started. As you can see, I pulled up an Euro USD chart, which is the currency I'll set the system up for you. I got the weekly chart, and here I got the H4 chart. You can use bar charts or you can use candle charts. It's just a simple click. You could even use line charts, but I don't think you can see that much on them. You'll get more information out of candle charts and bar charts. Okay, so let's continue with the chart setup. On the weekly setup, the weekly setup will be used to identify the trend. So what we'll do here is to put two indicators on them, two moving averages. I just pulled them over from the navigator onto the screen. Now the first one we will choose is 21 exponential moving average applied to the median price. It's just the average price, don't worry about it. And I'll put it in red so you can see it. And now we will put a second one on there, which is we'll get a period of 8, and it's a simple moving average, and I'll give it the color yellow. Just keep in mind, yellow is the fast one and red is the slow one. Now you can see here that what we will use for the trend identification on the Euro USD weekly chart is if the distance between the two moving averages is increasing, like here you can see it's clearly increasing. The slope of the yellow one is higher than the slope of the red one, or that that's an uptrend, or if it's decreasing, I would call it a downtrend. Now you can see that in the example here. You can see it actually got a negative slope, and this one is about 0. Now some people like to wait till the yellow, the fast moving average, crosses the red moving average and continues to move down till they'll really call it a downtrend, but I like to call this also a downtrend, so you will get a little bit of more out of the system. Okay, let's continue to the 4-hour chart and put some indicators on there. We'll also use the 8-period simple moving average, and we'll again color it yellow since it's the fast one. Now we'll put another one on there, and this is a period 55 moving average, again simple, and we'll color it red. Oh yeah, crimson red. Okay, now we will use the 55 period moving average to determine if our setups are high probability or lower probability. Don't get me wrong, both setups are fine, but as I said, you should be a little bit more careful on the lower probability trades. I'll actually show you some setups. Now, what you will enter, you saw how the trend identification went. Now let's assume you figured out that in this time period that there's an uptrend. What we'll do is to watch out for the 8 for this moving average. As you will watch here, okay? We will watch here for this moving average to change its slope from, as you can see here, it's negative to positive. As you can see here, it clearly goes up, so it's positive. If the slope change happens beneath the the 55 period moving average in an uptrend. This is a primary signal, a high probability. If this change happens like here above the 55 period here, you can see it, then this is a secondary signal. As you can see, this isn't as good. It will only give us about a break-even trade, where this one would have given us a lot of pips. Now, actually, this would have given us about, yeah, like 100. So you can see it. I'll just calculate it. If we entered like here and go up there, we would have gotten about 120 pips. So, as you can see, higher probability setups are always nicer to trade. Okay, that's it, and I'll show you in another video how to actually enter in some discretionary stuff. Okay, that's it.